Hello, everyone. Economic Ninja here. We have got quite a situation going on right now with a bank and essentially a savings app account that has locked 85,000 accounts down. There are so many people at risk, and I'm going to go deep into this. It's not just one company that's at risk, and this is one of those companies that was trying to get social media people like myself to do ads for them. This company not specifically contacted me. I do know some other people involved, and again, and I've warned some of these people of some of these other accounts that are very risky, and you're going to see how some of these companies, these fintech companies, are melting down right now. They have ties to crazy stuff in crypto. I'm going to go through all of that. All right. But I want you to think again how important it is to be diversified in your banking accounts. Can you imagine there are probably out of these 85,000 people, that's their only bank account, all their money locked up. They download some application on their phone. They think everything's going well. This is exciting because I'm in a high yield savings account, or I'm able to invest different ways. They just got locked out. Okay. All right. So we're going to start with CNBC. And if you want to know what that is, we just launched the pre-filming discount for both the Mortgage Master course that will show you if you've never had a mortgage or if you've currently got a house, how you will crush it. And I will show you everything you need to know about the mortgage industry and how to save thousands of dollars, or the 2.0 version, the investor series, and how to go crush it in the commercial real estate space and in regular residential real estate, okay? For finance, okay? No more private money, none of that stuff. So that's the discount link. It's like 83% off right now. All right, Savings App CEO says 85,000 accounts were locked in Fintech meltdown. Now, when they use the word meltdown, this on CNBC, it's a big deal. If any of you have this account, let me know down below. We never imagined a scenario like this. There's your quote from the CEO. Isn't that funny? We've been talking about bank failures, and I spoke about them 6 months before they started and said they're going to start, and I told you exactly when they were going to start because of lag time and how this cryptocurrency thing shook the nation's banking system, right? But it was a triggering event. And what it's doing is it's exposing very weak points, vulnerable points in both banks and non-banks. And then we need to think about fintech as well, all right? So it says right here, for weeks, 85,000 Yoda customers with a combined $112 million in savings have been locked out of their accounts. CEO and co-founder Adam Mullis told CNBC. So when Adam Mullis co-founded a fintech startup named Yoda in 2019, look at here, Tim saying, thanks to the super chat, he's making money buying puts on bank stocks and consumer lending products. It's like peeling fish in a barrel. That's exactly right. I can't give anyone advice of what to do, but I'm telling you what, there's gonna be a lot of people that make a lot of money shorting the banks. Instead, his company has inadvertently been a source of deep pain for thousands of customers who relied on Yoda accounts to receive paychecks, pay bills, and save for emergencies. This is one of those prime examples when I told you that many people are going to be left out of this real estate collapse, because you are going to see fintech absolutely melt down. Type 1 if you agree with that. It is so vulnerable, especially because it's not easy to raise money anymore in fintech. And the Silicon Valley model of, raise, hyper, expand the stock supply, and then, go into market, it's a bad model. It's a dirty model, and it always ends up ending poorly. But investors are going to have the pain handed to them. So it says here, these are people from Yoda that went and invested in this. Not invested, but they started their accounts, right? The crisis began May 11th. And the next story I'm about to show you, it goes way back beyond that, okay? It's very easy to see these crises before they come. It said it started on May 11th when a dispute between two of Yoda's banking partners, Fintech, middleman Synapse, and Tennessee-based Evolve Bank and Trust led to the lockup of accounts at Yoda and at least 24 other startups. Synapse declared bankruptcy earlier this year after several key clients abandoned the firm amid disagreements over tracking of customer funds. Now, I want you to understand this is another big thing. So we've got 3 companies, right, that are involved. The regulators are going to start going through their financials with a fine-tooth comb. And I can guarantee you this, more things are going to come out of this story. And I believe that you're going to see other fintechs wrapped up in this as well. Now it says for the past 3 weeks, 85,000 Yoda customers with a combined 112 million in savings have been locked out of their accounts. Modilis told CNBC the disruption has upended lives, forced users to borrow money for food, and thrown upcoming events like surgeries or weddings into doubt, he said. Now, when I told you that many people are going to be left out of this because they're going to simply miss a couple of payments, this is an exact wonderful example of what I'm talking about. Do you believe, type 2 if you agree, that there are people right now that are using this lockout, as horrible as it is, as an excuse to not pay a few bills? Hey, I can't pay. I have all my money in there. And they're probably telling the truth, right? But that's their excuse. I don't have the money for the bill because my direct deposit goes into there. I can't get it changed or get my new paycheck for a couple more weeks, so I'm not going to pay my bills. Okay, so I want people to understand this. This is the greatest example I can share with you why you need to be prepared for this real estate crash and be on the right side of the banks so that you're going to walk in and they're going to be begging to give you money. All right, because the creditors, they don't give a rip that your money is locked up in a savings account. That's why I've been talking about how, because of some scandal, that's not your problem. That's why I've been talking about for years to have multiple banks accounts in different banks, different types of banks, different sizes, different uses, because this banking collapse will be so big, it will happen. And this isn't to cause fear. This is actually happening. If you think I'm a fearmonger, you need to go back, get in the corner of a room, start sucking your thumb, and first draw a circle with some chalk because it'll make you feel muy bueno. All right? Just get yourself calmed down because all I'm talking about is absolute truth right now. This is going to be a big deal. So there you go. And I'm giving you all the tools you need through all these videos. If you want them, all wrapped into one, then, go check out the course. All right, here you go. Next story. So we've talked about Yoda. Now we're going to go to Evolve Bank because that story back there made it sound like, well, Evolve wasn't bad. Evolve along with Synapse were disagreeing, so they forced the lockup. Well, let's talk about that. This story is about a month and a half old, okay? It's out of Protos, entitled U.S. Seizes Pig Butchering Funds at Evolve Bank. You're like, what the heck is this? I guarantee you no one's talking about this on YouTube, okay? So if you don't mind, give me a high five emoji. All right, so here we go. A January complaint for forfeiture filing initially reviewed by Fintech Business Weekly details several $1 million seized at Evolve Bank and Trust related to a variety of fraudulent enterprises, including crypto-based pig butchering. You want to say crypto market's crazy? They got a crypto for everything, and they make it look really good. They print crypto out of these tokens. I'm not talking about a decentralized blockchain. Tokens out of thin air and sell them to people. They're marketing whizzes. Just like all of the scammers down below, don't ever believe that someone, because they've got my driver's license, a photo, or using AI for my voice and calling you on home, that I'm asking you for money. I will never ask you for money. I sell products. I help educate people, and I kill the amount of time it takes and all of the bad decisions you could make when you start investing in things like real estate and crypto, and we just throw them away and we teach you right from the beginning. That's what I do. But I don't ask people for donations and I don't ask people for money. So don't get caught in that. Just like these crypto scams. So here you've got several $1 million taken from Evolve Bank. Well, what happens when several $1 million are removed from a bank's deposits? Well, if they are running super lean on their deposits to how much they loaned out ratio, and it gets thrown off whack, and all of a sudden, a few $1 million came out. You're like, oh crap, our debt to loan ratio just got thrown off whack. We're screwed. So now all of a sudden they're in trouble. So they're going to start fine combing and finding people and finding money and trying to get money back, right? So that's what happened a month and a half ago, okay? The complaint, just remember, I'm explaining to you like the nuts and bolts, okay? So the US seized millions of dollars, pulled it right out, and the bank went, crap, we don't got enough to cover that. We've made too many bad bets, okay? So, and I'm not even saying that this scheme had anything to do with Evolve. They could be completely innocent and go, a company opened up a business, banking account. We're not going to, go through all of their records all the time. And it's not our job to find out how fraudulent they are, right? So they could be completely implicit or not part of it. But you have to understand the magnitude of when the government takes money out of your bank account, out of a bank's bank account, all right? So the complaint alleges that Parallel Designs Limited, Gotcha Pictures Limited, and Byte Chip LLC was engaged in an interconnected scheme to provide money laundering services, specifically received funds from cryptocurrency investment scams, pig butchering scams, and other fraudulent activity. The filing described the group behind the operation as 26 Chinese nationals who allegedly reside in California, New York, and various regions throughout China. Well, isn't that weird? They live in two of the most reckless, disgusting states based on politics in the country. Type 4 if you agree with that. I love Californians. 90% of Californians are amazing. They're just like me. The whole state is lined up. There's two horrible epicenters, LA and San Francisco, complete filth. All right, here we go. Sorry, I have to call a spade, right? So all of these groups appear to be conspiring together to orchestrate fraud scams. A U.S. Secret Service agent describes these allegations in the filing. Evolve Bank and Trust provides banking services, products that enable other firms to open up V accounts at Evolve for its clients. Allegedly, these firms engaged in fraud would open VA accounts or V accounts at one or more of the following platforms: Wise, Airwallex, Mercury, Relay, or Sodify. These are all money service business or MSBs that maintain contractual agreements with banking as a service providers and EBTs. So there we go. That's the problem with Evolve, right? It says Evolve eventually froze the funds associated with ByteChip, Gotcha, and other firm called Rhinotech, citing unsatisfactory banking practices, right? To clarify, Evolve provided services to Solid. Solid provided business services to ByteChip, and ByteChip provided services to its client. And it is one heck of an incestuous, it's a big deal. Like, they've got maps of where all of this money, this laundering system, is going through and involving Evolve Bank, okay? So now we know that Evolve is in trouble because money has been pulled out, and I have a weird feeling the amount of deposits based off of versus how much they've loaned out in all kinds of different loans is in trouble. All right. So now let's go to the third piece of the pie, and that's Synapse. Remember, it was Synapse and Evolve that were arguing and caused Yoda to freeze its funds. All right. 85,000 people. This is the thriller, and this is the most important part. Synapse backed Synapse has collapsed, and 10 million customers could be hurt. All right, let's dive into this because there's a lot going on behind. This is not just a Yoda story. It's way more than 85,000 people accounts. It says 100 fintechs could be in trouble, with funding prospects weakened for many more. Okay, please understand how big of a deal this is. Last year, and as a matter of fact, if you guys could do me a favor, and I did a handful of videos, a series that fintechs were in serious trouble because of the lack of financing, because they were hungry to find new investors about a year ago. If you guys remember that, type 9, let people know. I've been covering this as part of the whole banking collapse buildup. And it's going to get so insane. And what I believe you're going to see just before this election, massive amounts of money are going to be printed, and the Federal Reserve is going to have to open up. And I believe not only help banks, but they're going to have to actually sort of bail out non-banks and fintechs as well, because the amount of money that's going to be lost in accounts is going to be scary. And these are not set up to be tracked, or the FDIC is not insuring probably 99% of these. Okay, these are non-bank entities. It's no bueno. Okay, so it says last year, the fintech startup world, star of the 2021 venture capital heydays, began to unravel as VT funding grew tight. That's exactly what I was talking about. As we step into mid-2024, large chunks of the sector today are a downright mess, especially in the banking as a service, or BaaS. Remember, when you think BaaS, like BaaS, it really isn't. And think about the amount of money they've pushed into social media, other YouTubers, Instagram, people on X getting paid to push this crap. And I'm telling you, there is a danger with these gamified applications. And if I called them out at name, as a matter of fact, you guys can just start typing all you want. I'm not going to call them out by name because they're going to come after me, because they're going to say blah, blah, blah. Okay, I'm telling you, if a bank or a non-bank or a fintech has to gamify and build all of these things into their app to set off your dopamine response and have all these amazing promises of all these high yielding accounts, I'm telling you right now, it's not going to end well. Okay? The ones that are doing the most advertising more than likely are going to be the biggest ones that fall. Okay? So here we go. It says, the bankruptcy of BaaS, Fintech, Synapse, is perhaps the most dramatic thing going on right now. Though certainly not the only bit of bad news, it shows just how treacherous things are for the often interdependent fintech world when one key player hits trouble. Synapse's problems have hurt and taken down a whole bunch of other startups and affected customers all over the country. To recap, San Francisco-based Synapse operate a service that allows others to embed banking services into their offerings. For instance, a software provider that specializes in payroll for 1099 contractor-heavy businesses used Synapse to provide an instant payment feature. Others used it to offer specialized credit cards. Until last year, for example, it was providing those types of services as an intermediary between banking partner Evolve Bank and Trust and business banking startup Mercury, until Evolve and Mercury decided to work directly with each other and cut out Synapse as a middleman. All of a sudden, you're in fintech, you're having a hard time raising new funds from investors, and now you're losing one of your biggest clients. See the problem there? Synapse raised a total of over $50 million in venture capital in its lifetime, including a 2019 $33 million Series B raise led by, who cares? Here, let me just throw this out there. A company I'm part of, that company raised $24 million in one venture raise in 2008. Okay, so I work with people that understand that was a big number compared to, but still 33 million in a Series B. And you have to all of a sudden think about this too. Where's that money coming from? More than likely, it's a company that works as an intermediary between the investing in the companies and your pension fund. That's actually how it works. When I had my real estate brokerage, I specialized in going after the third-party companies, the big conglomerates that work for the big pension funds, and they are the ones that invest your pension's money. And so then we would go and show them big farmland, things like that, okay? Now, Synapse threw a lot of blame at Mercury, both of whom raised their hands and told TechCrunch that they were not responsible. Once responsive, Synapse CEO and co-founder is no longer responding to requests for comments. But the result is that Synapse is now close to being forced to liquidate entirely under Chapter 7. And a lot of other fintechs and their customers are paying the price for Synapse's demise. For instance, Synapse customer teen banking startup Copper had to abruptly discontinue its banking deposit accounts and debit cards on May 13th as a result of Synapse's difficulties. This leaves an unknown number of consumers, mostly families, without access to the funds that they had trustingly deposited into Copper's accounts. For its part, Copper says it's still operational and has another product. It's financial education app, right? So Copper, take them out. They're in trouble. Funds at crypto app Juno were also impacted by Synapse's collapse. How many of you have heard of Juno? It says, CNBC reported a Maryland teacher named Chris Buckler said in a May 21st filing that he was blocked from accessing his funds held by Juno due to the problems related to the Synapse bankruptcy. Look, this is so much bigger. If you think for a second it's Yoda, because today's or 2 days ago, the headlines were saying 85,000 people are locked out. I'm telling you right now, I just showed you 3 other big companies are in trouble, and then 2 other financial startups that are these money apps, these savings apps that you think are great. But this is the thing. How did they acquire you as a customer? Did they give your buddy $20 as a referral fee to get them in? I'm all for customer acquisition costs and referral links and all that stuff. I get how that stuff works. But when they need to keep your attention and draw you in and have fireworks go off when you make your first deposit, there's probably something going on here. The gamification of banking is disgusting to me. Banking should be old school banking. I know exactly where my money is. I know who insures it. I know how much I'm going to be making. They're not like constantly barraging me with all kinds of new ideas to put my money to work. And I'm telling you, I believe wholeheartedly that you're going to see more problems. And this Synapse is going to be a big deal. And it says here, based on Synapse's filings, as many as 100 fintechs and 10 million end consumers could have been impacted by the company's collapse. Industry observer and author of Fintech Business, Jason Mikula, estimated in a statement to TechCrunch. But that may understate the total damage, he added. And some of those customers do things like running payroll for small businesses. Can you imagine if all of a sudden thousands of small businesses across the country had a disruption to their payroll? I want you ready for this. If you are getting ready, say I'm getting ready down in the comments. If you think for a second this is not going to end up in an epic market downturn, and the markets are already turning down. That's why these companies are in trouble. That's why banks are in trouble. They can't loan out money. Unemployment is rising. I want you to take advantage of that. If you're ready to take action, then join thousands of students that are doing it right now. I just released today, and I don't know how long the sale will be. There's the QR code. I'll put a link down below to the Mortgage Master and the Mortgage Master 2.0 Investor Series. I'm going to show you how to save thousands of dollars just in closing, because you're going to know so much about the mortgage system and how to get your credit set up and all your ratios and all that stuff. There's checklists and all that kind of stuff. But then when you're ready to jump into investing, I'm going to show you how to squeeze blood out of a turnip when it comes to mortgages. And you're no longer going to ever need expensive money, private money, ever again to go buy those flips. I'm going to show you how to do it right, do it legal, and you're going to absolutely crush it. There's the link. I don't know how long. Over 50% of the videos have already been filmed. I'm filming more tomorrow. They're going off to the editor. As soon as that's done, the pre-filming discount and bundle, gone. Hope you guys have a great day. The Economic Ninja is out.